Hi, welcome to Market in a Minute. I'm Patrick Adams. So we're building the case for no rate hike in September. So watch the core CPI on Wednesday. If it's 2.5% or less on the core, we don't think there's much of a possibility for a rate hike come September. Oil's been stuck for now, right? There's been no resolution. We go below 80 to above 80, we're kind of stuck. We need some resolve there. If we get that resolved, clearly that rates are going to come down. Now we have updates on some of our cancer ideas. So Grail and Immuneering, both gave us some updates last week. These could be really big stocks. So Grail is right in front of us. Immuneering is going to take some time. But we're going to go into conference season, and people are going to realize how undervalued this stock is. So disclosures, please read through those at your convenience. We're not trying to solicit you to buy or sell or anything else on this. It's strictly intended to be educational. Okay, market update. So with the lower employment numbers last week, negative 23,000, we think that takes the rate increase off the table. Okay, so no rate hike in September. However, just to cement that, we want to see the core CPI come in at 2.5% or less. So if it does, then I think it's completely off the table. I know the target is 2% for the inflation, and we're not there yet. But I don't think it justifies increasing rates just because inflation is above 2.5 and it's moderating its way down. Trump and Iran. Okay, this has to get resolved at some point. We're stuck in this $75 to $90 range. I think that the IRGC needs to be wiped out. It would do the world a heck of a lot of good if it happened. The Kurds to the north. Now, I don't think Trump nor Turkey wants to get the Kurds involved in this, but they would love to be involved. They would send troops. The Israelis would send troops. The Arabs doubt it, right? And the Europeans, I don't think there's any chance that will occur. So likely this is not going to get resolved anytime soon, but we know that the trend in oil prices as we go forward will probably drift back down below 80 into the 70s and potentially in the 60s. If it's completely resolved, we're probably going to go back to where it was prior to all this occurring at around $57 or lower. Earnings growth has been incredibly strong, okay? Up 50% this quarter for the S&P 500. That's unheard of. I've never seen this before in my life. So big increase in earnings this quarter. Where's it coming from? Oil, energy. Okay, you can't count that because that's not going to last. All this capital spending. We are in the biggest capital spending cycle of my lifetime, and you'd have to go back and check the record books in terms of the early 1900s as to what the capital spending was per GDP. But we're probably somewhere in that same ballpark. So obviously, communications, consumer, those have large cap technology stocks in them along with technology. So we're seeing huge increases out of those sectors of the market. The issue is, look out to next year. So there's not a chance we're going to be up 50% in the second quarter of next year. Just not going to happen. I'd bet whatever you want to bet. There's no way we're going to see 50% earnings growth in that quarter. So we may be positive or it may be a little bit negative, okay? So the market's going to start to discount this. If you pull back all the capital spending, the S&P is probably up 10 to 15% in terms of earnings growth this quarter. That's really strong. I'd be happy with that. So if you look out to next year, you are probably flattish, occurring into the second quarter, provided the capital spending this doesn't roll over. At this point, it doesn't look like it's going to do that. but the market's going to start to sniff this out. So it's going to start to become more concerned about this as we get into next year. The market wants to rotate. It wants to do it really bad, but it's not going to do it until oil prices come down, pushing inflation down, pushing that 10-year treasury down. So just keep in mind, where's the money going to go? We think it goes into healthcare. And we think we get a rotation into healthcare even without the 10-year treasury dropping. So lots of conferences coming up. There's a lot of buzz out there. We see actually IPOs and secondaries being done fairly easily, which surprises us. So the trend in the group is that more money is coming to it, more money wants to come to it, and they're looking for ways of doing it. The technicals. So the sentiment, surprising, isn't more bullish than what it is. Maybe this is a little bit of a lag in this survey, but we think probably it's going to pop above 40 here in terms of the bullish sentiment. And historical averages are about 37.5. So it's currently 37% of the investors out there are bullish. So I wouldn't worry about this until we get, close to 50. Could be even higher, but close to 50 in terms of the bullish sentiment before it probably matters. And so this indicator is a contrarian indicator. So when the bullishness is really high, it's time to be very cautious. We're 38% bears, so the bull to bear ratio is still positive for the markets. Now look at the S&P here. Okay, so we talked about this, how we broke below the support level, back above the support level, which is the resistance level. It broke through there nicely, broke to 50 in the 20-day moving averages, and it's now, the markets are now 10%, that's what this says, 10% above the 200-day moving average. So that's in the ballpark of being somewhat concerning. We're clearly overbought at this point. I don't really start to get too overly concerned about it until we're about 12% above the 200-day, and it could go higher than that. But we think it's somewhat not a great time to deploy a lot of money into the markets. Be patient, pick things off. You always get your chance. Now the healthcare sector. So Grail announced that they will have their advisory committee on September 23rd. We were a little surprised by this. Grail on their conference calls last week said they wouldn't be surprised to have an advisory committee meeting. And then Shazam, it was announced that they have an advisory committee meeting on the 23rd. So these things could be really bad for stocks at times. So Capricor, this is the name we like. This is a Duchenne muscular dystrophy drug company. They voted 3 for approval, 9 against, and they have their PDUFA date, approval date on August 22nd. The stock just got killed because prior to the meeting, the FDA put out some really bad comments about the drug, even though it had really good statistical significance. So the drug looks good, but the FDA came out with some reasons why the drug should not be approved. The stock trades below cash. Capricor trades below cash, so we kind of think it's a good bet. How far can it go if it's below cash already? And if it hits, you got a 10x upside potential. So the probabilities are low it gets approved. They probably have to do a follow-up trial, or maybe it gets conditional approval and having to do a follow-up trial. But we think that one looks compelling because that cash position supports the company at $4 a share. Now, with Grail, we think it's going to plow right through that advisory committee. We think there's a lot of positives from the FDA to support this approval, and it's such a big improvement for detecting cancer as we currently have. It works on 50 different types of cancers. They can catch it early. So if you're not getting this test, this blood test is real simple. You should. It could save your life. So catching the cancer in in stage 1 or 2 rather than waiting until it metastasizes in your body. So the market cap of this company is 3.3 billion. And just think about this. Illumina paid $8 billion for it before they had any of these trials done. So their trials are done and they're right in front of approval. So they paid $8 billion for it. This is in 2020. You're telling me that some big drug company wouldn't want to have this asset? So, a big company already said they would want to have it, but they can't own it because they would have a monopoly. So I think there's a lot of upside in this. Here's the chart. Got to 116, right? It was there early in the year. It had a big hit here. Okay, nothing really that spooked us, but it spooked the market. And then now it is, back to close to this 200-day moving average. We'd like to see it pop through that and continue the momentum. The catalyst for this could be that advisory committee meeting, because I think they're going to get a very positive review of what they're doing. Immuneering, okay, this is another cancer play. This is a drug that focuses on pancreatic cancer, but it's a platform drug where it could work on other cancers as well. So it wouldn't surprise us if a large company came along and said, hey, how about we give you 5x for your company at this point, which would be a true bargain relative to where Revolution Medicines drugs trading. That company is very similar. It has a $44 billion market cap. Immuneering is somewhere around 300 million. So 44 billion versus 300 million, and we think that Immuneering may have the better drug. So the big reason that this stock has come down is because of Revolution Medicines' big positive announcement, and everybody thought that they were going to take the air out of the room, that Immuneering would not be able to conduct their phase 3 trials because everybody would want Revolution Medicines' drug. Well, that's proved to be completely wrong. There's 30 sites that they have now. They're conducting their phase 3 trial. They have plenty of patients that want to be on this drug to try it out. So the side effects of their drug versus RVMD are very minimal. So we think they might have the better drug. And some of the stats we've seen looks like they do have the better drug in terms of the life expectancy of the pancreatic cancer patient. And then a good biomarker for this is body weight. So typically when you get cancer, you lose weight. And that's a good biomarker. It tells you about the health of the patient. So the patients on Immuneering's drug have maintained the body weight or actually improved the body weight, has gone up. Now they are going to also be testing on lung cancer in the back half of 2027. Remember, they don't need to do the safety data because they already got it done with pancreatic cancer. So we're assuming that to be true. And then starting another cancer type in the back half of 2027. We love the chart. Look how this chart sets up. Okay, long consolidation period. Has tested $4 a couple times here, 3 different times. It's starting to break through the 20-day and the 50-day. Let's get this thing going, right? So let's see it above the 200-day. And we think by going into the conference season, people are going to realize how undervalued this company is, and it could have a very big run. So a phase 3 pancreatic cancer drug should have at least $1 billion market cap. They're fully funded till 2029, so they have no cash issues. So we hope this was helpful. Just keep in mind, we're here to help. This is educational, and if you have any questions, come to my website, Patrick Adams CFA. Also sign up for a hard copy of Market in a Minute, and then you can come to PVG and see what we're doing over there, or just ping me off the video. Take care.